Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of Wall Street's secrets. And today UPEXI is coming clean with some big decisions made by its shareholders. Talk about a shareholder showdown. We're diving into UPEXI's latest report, and it looks like shareholders have been busy voting on some pretty significant changes that could really shake things up for this company. Let's see what they decided. First off, UPEXI is reporting on a special meeting of its stockholders that happened on August 19th, 2025. Now get this, over 66% of the company's total shares were represented at this meeting. That's a huge turnout, folks, suggesting that whatever was on the agenda was pretty darn important to the folks who own a piece of UPEXI. One of the main events was a vote to boost the number of shares available for their incentive plan. Imagine a company giving out special options for its employees to buy stock, right? Well, they wanted to more than double the pool of shares for these options, going from 10 million shares to a whopping 25 million shares. And guess what? The shareholders said yes. A massive 2,358,140 shares were voted in favor of this increase. This tells us the company likely wants to attract and keep top talent by offering a bigger slice of potential future rewards. It means more stock options could be handed out, aiming to align employees' interests with those of the shareholders. This could be a good sign for the company's growth prospects, assuming those employees can actually drive that growth. But that's not all. The shareholders also had to give the green light for issuing a bunch of new shares. This wasn't just any issuance, it was tied to a securities purchase agreement, a fancy way of saying they're selling stock to raise money. The deal they're talking about could let them issue more than 20% of their already outstanding shares. That's a substantial dilution, meaning existing shareholders will own a smaller percentage of the company unless they buy more shares themselves. And again, the shareholders approved it. Over 23 million shares voted for this. This likely means the company is raising a significant amount of capital, possibly around $500 million as the proposal mentions. Raising this much cash can be a lifeline for companies, especially if they need it for expansion, research, or paying off debt. However, like I said, this comes at the cost of diluting ownership for existing shareholders. It's a classic trade-off between immediate cash needs and long-term ownership stakes. Looking at the numbers, especially the massive approval votes for both proposals, it indicates a strong level of confidence from the shareholders in the company's leadership and its future plans. When shareholders vote overwhelmingly in favor of increasing share pools for incentives and approving share issuances for funding, it generally signals that they believe these moves will benefit the company in the long run, even with the dilution. It's also worth noting that UPEXI is identifying itself as an emerging growth company. This means they can take advantage of certain regulatory flexibilities. For example, they might not have to follow all the same strict accounting and reporting rules as larger, more established companies. This can make the company more nimble, but it also means investors should be extra diligent in scrutinizing their financial health and disclosures. UPEXI's common stock is traded on the NASDAQ under the ticker symbol UPEXI. This means it's a publicly traded company, and these reports are for all of us to see. It's good that they are transparent about these significant decisions affecting their share structure. The report is signed off by Andrew J. Norstrud, who serves as the Chief Financial Officer on August 20th, just a day after the meeting. This shows prompt reporting, which is always a good sign. So what's the big picture here? UPEXI seems to be in a phase of aggressive growth or seeking to solidify its position. By increasing the incentive shares, they're betting on their people to deliver. By approving the share issuance, they're securing the capital needed to execute ambitious plans. The critical question for investors now is how effectively they'll deploy that capital and manage the dilution. Will the injected funds lead to substantial revenue growth and profitability that outweighs the smaller ownership stakes for existing shareholders? It's a gamble, a common one in the business world, and only time will tell if their bets pay off. The company is clearly aiming for expansion and is willing to dilute existing shareholders to achieve it, which is a strategy we see often in fast-growing tech or biotech firms. The key will be execution and transparency from here on out. What's your take on these votes? Are you excited about UPEXI's future or concerned about the dilution? Let us know your thoughts in the comments below. If you found this breakdown helpful, smash that like button. And don't forget to subscribe for more corporate insights. And hey, join our Discord community, link down below for even more discussions. Thanks for watching, and we'll see you in the next one.